Hi, welcome to Market Alert for Tuesday, 7th of August 2018. So yesterday, as it says here, stocks, bonds manage modest gains despite global currency carnage. And again, yesterday I spoke about moving the stock markets to the upside, which is precisely the case. And in the pound, we saw the market taking out the 129.57 level. You can see it's trying to come back this morning. And I wouldn't be at all surprised to see a bit of a rebound, having had the last 3 days to the downside. The market's due for a bit of a dead cat bounce there. But yesterday, you'll see on the intraday there's the DP level. We're below the 200 moving average and the 50, and then we close below the 20 with professional selling, and it's down we go. And you can see how much resistance we've got in this area here for this market, and then you can see prices moving lower. But overnight, sideways to higher. The market's got to take out the DP level if it's going to move higher. That's for sure. A bit of buying there, back above both the averages at the moment. News, well, there's not a lot around at all. That's all you're getting today is the Halifax House Price Index. House price is currently moving lower, but only slightly lower. Forecast is 0.2 increase for house prices there. And then in the Dow, it said yesterday market to move higher. Market moves lower to begin with. Where does it sit? DP level. Market moves up to the 20 bar average, retraces nearly a double bottom there, as opposed to 76%, which I will show you. You can see there you've got the market up. And I'll do that again. We'll just take out the extend right. So from there to the 20 bar average. You can see there once the market comes back above the 76% retracement and then eventually breaks the 20 bar moving average through the 50 and then moves higher and then just creeps through the DP level there, and the DP level, the close of Friday and the high of Friday, which was also the high, and then straight up to the R1. 80% of the time the market will stop here. You then get your retracement here. You'll see there the market closing stops at 76%, and then down we come back to Friday's high. Very predictable there, and you'll see if we look inside of the daily chart, the market now heading for 255.75. We can get rid of this and we can get rid of this at the moment, and what we'll do is just bring this over a bit and drop that down, get rid of this, and that's our next upside target. Move this across. We haven't got too far to go before we go to the all-time high, so let's just throw that one in as well, and then drag the chart over, and there you can see where the market is aiming for. Quite simple really when you look at it this way. Know the background of your market, know where you are in the cycle, and you can more or less predict where the market is likely to go. So there's your 2 points now where the market's going to have a bit of a problem. 25,600 actually is going to be the issue. It needs to drive through there, and then it's clear for 200 points, and then we're about 1,200 points away at the moment by the looks of things. Yeah, somewhere in that region, so 1,100 points. We'll see what happens, but there you go. That's the Dow. And then in Bitcoin in the daily chart, yesterday the market tried to move higher, turned around and reversed and move lower. Next downside targets are shown on the chart here, and I do believe we're still going to be heading in this direction, and that's fine by me. Buy up Bitcoin cheaper is always a bonus, and as I say, the signals have already, again, if you look at this logically, doesn't matter what the market is. You've got a situation here where you've got the market stops, it starts to come down, reverses, stops at 76%, and then heads south. You've also got the 200 bar moving average, place to put your stops above, and then you've got the market lower, taking out the 50 bar, and now consolidating a bit there before potentially being able to move back to the downside. There's nothing to move this market to the upside at the moment. As I've said before, and will continue to say it every day, a market doesn't blow off like this. There's no shakeout. You've got to get rid of those who have been holding this at 20,000, and the only way to do that is to have some sort of climatic volume, big volume like this, but not on the upside, on the downside, and it will be self-evident if and when that happens. It is a new market. It works slightly different in some ways, but the price patterns are the same. It's how they get there is the issue at the moment, because it's unregulated, and it will allow for traders to move prices as they deem fit as well. As obviously you get some of the big players, which are known as whales. They can tend to do whatever they want with the Bitcoin price if they move in all of their holdings, which again, don't forget that Bitcoin is restricted to 21 million. Is it 21 million? Yeah, 21 million coins, which obviously are divisible as well, but that's the way that this is going to play. It's a new market, and it will be interesting to see how it pans out over the longer term. Right, that will do it for this one. If there's anything to report, I will let you know, but other than that, as ever, thanks for watching. See you in the next one.